TV18.
Stocks dip after a strong open. Big block trades in Adani Group stocks stand out, even as Realty stocks stand out as stark gainers. Mid-caps outperform as well.
The Supreme Court forms a marquee panel to review allegations against the Adani Group and SEBI rules in light of the sharp slide in Adani Group stocks. Experts give this move a thumbs up.
Joint ventures of RVNL and BHEL Titagarh Wagons are expected to split a mega 58,000 crore rupees order for 200 train sets under the Vande Bharat program. These stocks jump.
And Bajaj Finserv gets a regulatory clearance to enter the mutual fund business. Electra Greentech's e-tippers get the green light to hit the roads, and AHL gets a cabinet nod for the sale of trainer aircrafts.
Two-wheeler makers Hero MotoCorp and Eicher Motors see a healthy pickup in sales in February and expect improved consumer sentiment to sustain the momentum.
Well, hello and welcome to Halftime Report. I'm Sonia Shenoy and with me is Mangala Malu. Well, the market is not doing too much after the pullback that we saw yesterday. There hasn't been any follow-on rally in the market, and that says a lot about how the texture may not have recovered. It's been a sell-on rally market. After yesterday's move, the hope was that we would see some follow-on buying, but that has not played through. So clearly, it's still a weak market. What's dragging today is definitely the Bank Nifty, of course, is under pressure, but a lot of other stocks, auto stocks like Maruti are down. TCS, Cipla, Infosys, M&M, Bharti Airtel are all your big losers. So let's see, the mid-cap index is just between, the red and green line, but otherwise you'd have to say no conclusive recovery in the market, and that seems to be a bit of a bother.
That may be a bit of a bother, Sonia. Yes, no conclusive recovery in the market, but at the same time, the mid-caps outperformance and the fact that it hasn't fallen may perhaps gives bulls some chance to go ahead and play the expiry that plays out in the latter half of trade today as well. So let's see how that pans out. Mid-cap index for now doing extremely well. Though interesting news coming in at the bottom of your screen, Reliance announcing that they will launch genome sequencing tests, and the minimal price for that would be close to around 12,000 rupees. I just did a cursory Google search, and genome sequencing tests are actually expensive. They're upwards of 20,000, 24,000 odd rupees. So for them to actually, give this at a lower price would be interesting to see whether it would have an impact on all the other players, etc., or not. But step in the right direction for medicals.
It is, and genome sequencing is used a lot, as they've been pointing out, to detect genetic disorders. It's generally used a lot by cancer patients as well, to detect if there is any kind of, if their family is predisposed to any ailments, etc., because of their own cancer. So this is an avenue that is growing, and Reliance is getting into it, genome sequencing. So let's see, that's the latest development over there. But the other big news flow that we've been tracking is the Supreme Court has formed a marquee panel to review allegations against the Adani Group, and SEBI has ruled in light of the sharp slide in Adani Group stocks. Ashmit is with us to tell us the latest on that. Ashmit, over to you. Okay, we'll get to Ashmit in just a bit, but that's the latest on the Adani Hindenburg case. Gautam Adani has tweeted, the Adani Group welcomes the order of the Honorable Supreme Court. It will bring finality in a time-bound manner and truth will prevail. That's the latest tweet that's coming from Gautam Adani. But let's get back to Ashmit with a lowdown on what has transpired so far. Ashmit, over to you.
An important judgment this coming in from the top court, the Supreme Court giving much needed clarity on the regulatory path that needs to be followed from this point on, and towards that end, there are two key takeaways from these proceedings. The number one takeaway here is that the Supreme Court, just as it had said, will not accept recommendations from either the petitioner or the government, will go ahead, will make his own expert committee to study this matter, and towards that end has formed a 5-member committee that will be headed by a former retired Supreme Court Judge, Justice Sapre. This committee is a high-powered committee. It has luminaries there as a part of its composition. We have the likes of K.V. Kamath, Nandan Nilekani, Somsekhar Sundaresan, O.P. Bhatt, Justice Devadhar, that will be a part of this committee. Now, the mandate is twofold. Number one, to study some of these questions and issues that have arisen with respect to Adani Group of companies. That's part one. The other is to study the current framework, the existing framework with respect to investor protection and recommendations, if any, required to strengthen the investor protection framework. Investor protection because Supreme Court a number of times has expressed concerns on whether or not the existing framework is sufficient to account for the volatility that was seen in Adani stocks and the subsequent investor wealth erosion. But that's only the first takeaway. The second takeaway is equally relevant. This is a very explicit direction that is coming from the Apex Court to the market regulator SEBI, where the Supreme Court has identified 4 key issues. Number 1, market manipulation, Securities Act violation, minimum public shareholding norms, and related party transactions. SEBI has been served with this 4-point mandate to verify whether or not there have been any violations, whether or not there is any merit in the concerns they raised in this Hindenburg report, and whether or not there is scope for any regulatory action. That is a report that SEBI will have to submit within 2 months' time. That report will have to be submitted towards the expert panel, and then subsequently the expert panel will make its recommendation. So a time-bound exercise is what the Apex Court is expecting the onus now on SEBI as well as this expert panel to go ahead and to take these proceedings forward. Back to you.
All right, Ashmit, thanks a lot for that. And as Sonia pointed out, on the back of that, we did have Gautam Adani tweeting as well. He said that the Adani Group welcomes the order of the Honorable Supreme Court. It will bring finality in a time-bound manner and truth will prevail. Let's also now listen into one of the petitioners, Advocate Vishal Tiwari, on what he had to say on the order.
See, today Supreme Court has pronounced the order and it has constituted a committee to inquire into the Hindenburg report and also to suggest the measures so that in future the regulatory mechanism shall be made more stronger so that the money of the investors could be saved, and it will also suggest the measures to strengthen the entire regulatory mechanism.
Today Supreme Court has ordered that and form a special committee for investigation. How this investigation will go on process and when they will submit their report?
See, today committee has been constituted, so now after the submission of the report only court will reach upon any conclusion, and we hope committee will definitely see the concern about the common investors.
Okay, let's slip into a quick break. On the other side, we'll get back to tracking the markets, many buzzing stocks. So we'll get you all the stock-specific action in just a while. Stay with us. Welcome back to Halftime Report. As promised, we're going to tell you about a lot of stocks that are buzzing. Now, Olectra Greentech, a name you may not have heard recently, but now in the last couple of days, it's back in action. The stock at 524 rupees is up 54% from its 52-week low that it just hit about a couple of months ago. And this, this huge surge has come in after a couple of orders that the company has won. The latest is that it's received an approval for its electric tippers. Now, Olectra Greentech manufactures electric buses, electric commercial vehicles, and it's finally received its first order for 20 electric tippers. That's in the final stages of discussion. So that's a positive for Olectra Greentech. The other thing is recently it announced the development of a hydrogen bus with Reliance, and they will be rolling that bus out in the next 1 year itself. So that's additional revenues for them. The electric bus division for Olectra has been very strong, actually. If you look at the last 9 months of this year, revenues in the e-bus division have risen 174% on a year-on-year basis and sitting at almost about 700 odd crores. So that is about Olectra Greentech. The other space I'm looking at is the entire two-wheeler space. So if you look at what's happened this month, in the month of February, the month gone by, all domestic two-wheelers have done pretty well. The growth has been quite strong. Bajaj Auto domestic sales went up 36%. Hero MotoCorp had a 10% growth. TVS reported almost a 30% growth in their domestic two-wheeler segment, while Eicher Motors Royal Enfield saw a total sales growth of 21%. So while exports are still under pressure, the domestic two-wheeler space has improved quite a bit. But the management commentary is mixed. Hero MotoCorp says that consumer sentiment is improving and will continue to do so. But Bajaj Auto says that the domestic demand is still soft. The worst is not over just yet. And this post-COVID pent-up revenge buying is tapering off. So there's mixed commentary coming through, but the numbers are looking good this month.
All right, the numbers looking good, but what's not looking good right now is L&T Tech Services. The reason for that is Nomura has initiated coverage on the stock, and that's with a reduced rating and a target price of 3,050 odd rupees itself. Why is this? Because they believe that broad-based ER&D service providers have actually gained market share versus pure play players, which is L&T Tech Services, and there are challenging macros which will weigh on their discretionary ER&D spending. This is the spending made by the clients itself. the attractive portfolio suit will be testing during slow macro and SWC integration, and as a result of which they expect 15% earnings CAGR over FY22 to FY25. The stock at around 3,700 odd. Nomura believes that it can go all the way lower to 3050.
Okay, and railway stocks are definitely in focus this morning. In case you missed out on the data, RVNL is the star of the show. BHEL and Titagarh Wagons are also doing quite well as these companies have emerged as key bidders for 200 Vande Bharat train set orders. Vivek is here with the details. Vivek, over to you.
Well, absolutely. So what's actually happened is that yesterday, the tranche of 200 Vande Bharat train set orders, the bidding details were out, and in this particular bidding details, RVNL along with its Russian JV partner has emerged as the lowest bidder as far as the L1 order status is concerned. The estimated cost that RVNL bid for is 120 crores per train set, and in this particular JV consortium, RVNL has 25% share. Now, other stocks to watch out for, important development for BHEL as well as Titagarh Wagons. Remember, BHEL and Titagarh Wagons in a joint consortium also made a bid, and they emerged as the L2 in this particular bid. The estimated cost for their bid was 140 crore per train set. Now, the total overall estimated order size is 58,000 crore, and this is split between number one, manufacturing, and number two, order as well as maintenance. So when you're talking about manufacturing, around 26,000 crore is the actual total manufacturing order that the companies will get once they deliver these train sets, and the remainder 32,000 crores will be paid over a 35-year period, and this is for operations as well as maintenance. A key point to keep note of as far as the L1 and L2 status is concerned is that the L2 bidders, that is BHEL as well as Titagarh, will have to match the order bid as far as RVNL is concerned in order to get part manufacturing status, that is 80 out of the total 200 train sets that have now been put up for in this particular tranche.
All right, Vivek, thanks a lot for that. We will shortly be joined by the management of one of these companies as well to detail what this opportunity entails for them. Meanwhile, just take a short break. Before we do that, pull up Power Grid. Power Grid has actually picked up some pace currently at the high point of trade, and from the broader markets we have some pickup in Trent and Metropolis. Metropolis has been doing well since morning. It's recovered about 3% from lows and has now moved to the high point of trade. Take a short break, come back. On the other side, we will have markets as well as individual stocks, and we'll also get in some trading strategies with Sudeep Shah. Welcome back. We're lower for the Nifty right now, below the 200-day moving average. So that is one mark that we'll have to watch out for. And as we speak, let's keep an eye out on everything that's taking place in the F&O space as well. Because from the highs, we've seen a wee bit of a slip, 17,377. And this corresponds to the 200-day moving average of 17,392 on the Nifty itself. Because it's weekly options expiry, we have to keep an eye out on a couple of these options as well. A lot of writing seen at the 17,400 call. So that one should come up for you on your screen. As we speak, almost, a crore shares unwound on the 17,400 call. But if you pull up the 17,450 call, that's the one that should come up for you as well. That too has seen some bit of an unwinding. 17,300 put has seen a fair amount of writing. So that's telling you that at the lower levels, we might find some support. And those aggressive put writers believe that 17,350 itself could hold as a support, because that's the one which has seen about 67 lakh shares in writing as well, telling you 17,340 to 17,350 could be a bit of a support. But at higher levels, we are awaiting some sort of resistance above that 17,400 mark. For the Nifty Bank, which has been, the leader of the rally so far over the last 7-8 trading sessions, the 20-day moving average could pose a bit of a resistance, and that's what we're seeing as well. The Nifty Bank is about 300 points away from that, and it has rallied a fair bit from the lows that it hit on Monday, almost 800 points, maybe seeing some bit of resistance. Sudeep Shah, who's the derivatives head of derivatives research at SBI Securities, joins us now. Sudeep, your thoughts on the F&O positioning ahead of expiry, and do you expect a second half bump?
Yeah, good afternoon, Mangalam. What happened is that we have seen after a continuous fall in the last 8 sessions, we witnessed a recovery yesterday. Now, post that recovery, what is missing today is the follow-up buying, and we are seeing some mixed action in the large cap space. but a better market breadth is visible right now in the mid-cap space. So what I feel is from the F&O space, from an expiry perspective, 17,330, 17,350 will act as a strong support with some good put writing happening at 17,350 and 17,400 strikes. But on the other hand, 17,400 calls are witnessing some serious additions. So this 200 DMA zone of 17,390 and 17,420 kind of band will act as a resistance, and index will need to break out and sustain above this 17,430 zone for a up move up to 17,600, 650 in the next couple of days. So all in all, 17,430 will now be a crucial number to watch out for on the upside.
Okay, what about individual stocks? Anything that you think deserves a look in right now? I mean, we're seeing some good up moves in some of the IT names. HCL Tech is doing well today. Dr. Reddy's, Bajaj Auto, Bajaj Finserv. Anything that you like, either on the buy or the sell side?
Yeah, Sonia. So right now, today is just the first day of up move after a fall in HCL Tech. So we would just like to watch it for a day or two, let some positioning happen there, and then we'll take a call on that. But there are a couple of mid caps that we like right now, Voltas and PFC. So if we speak about Voltas now, we've been witnessing an outperformance in this air conditioning space, cooler space of late now. So after a fall from 1300 to 750, 800, there is an outperformance from Voltas in the last 1 month as against the mid-cap index also. And of late, the stock has managed to reclaim its 200 DMA after 10 months. And it is looking strong on the daily as well as weekly charts. So with the kind of chart formation, we feel that this stock can be bought with a 900 stop loss and a 955, 960 targets on the upside. The second pick would be Power Finance Corporation, PFC. Last 3-4 days, we have been seeing a pickup in the CPSE stocks, this space. So PFC has given a symmetrical triangle breakout on the daily charts, and the stock has been witnessing a higher top, higher bottom formation in the last 4 sessions. So also, apart from that, it is looking good on the weekly charts also. So I feel with the kind of technical positioning as well as the open interest built up on the long side, the derivative data supporting this stock can be bought with a 146 stop loss and a 158 to 160 target on the upside.
Okay, all right. Thanks a lot for joining in, Sudeep, and have a great day. That's SBI Securities with their views. Let's slip into a quick break. We'll get you more on the markets, a lot of stock-specific action as well on the other side. Stay tuned. Welcome back to Halftime Report on CNBC-TV18. Well, for now, the market is quiet. It hasn't really moved much. It's just that it's under a bit of pressure. There's been no recovery, and that stays, status quo, really, through the course of the day. So let's get you some opinion. We had a chance to speak to Andrew Holland, the CEO at Avendus Alternate Strategies, to understand his view of the market. He's quite cautious. He says that there's no real positive trigger which could take the markets out of its slumber. Listen in.
The data is not supporting the market's optimism that the Fed will go on hold soon. So that kind of, with what you're saying about the 10-year bond yield at 4%, it kind of puts us in that no man's land a little bit, right? In terms of a market still optimistic, will the Fed go on hold? But growth is still, quite resilient, both in Europe and the US. And obviously with China reopening, that brings a bit more optimism. So that kind of stagflation theme, or narrative, might come at some point. RBI in April, might go, higher and stay there for longer, which is not great for our growth and probably would mean again earnings revisions, for at least for the first half of the year. And therefore, there's no real catalyst for our market because globally nothing's happening, and locally there's nothing really to kind of get excited about. I know that obviously the budget was good, and we'll see the benefits of that in the second half. But it's going to be that kind of tricky first half. Is probably not going to be great for our markets. At best, we can maybe tread water around these levels a bit lower. And then the second half, I think, will start to get better as growth starts to pick up and earnings forecasts get revised a little higher from where we are today. Defence, renewables. We know that's going to be a global investment cycle, and that's going to continue in India. So we're not moving away from that. We're not moving away from the fact that there'll be, in terms of infrastructure spending, more on kind of factories and smart offices where India can provide some of the security kind of problems that we've seen in terms of supply outside of China. And those are the things which I don't think are going to go away from us, as well as the whole domestic consumption theme in terms of travel, hotels. It's things we were talked about before, and I just can't go and move away from them to try and find anything more exciting at the moment.
All right, with that, we'll step into a short break. On the other side, we'll take a short break from the equity space. Manisha Gupta joins in early today with Ajay Kedia, who's the director of Kedia Advisory. They discuss commodities right after this short break.
Welcome back. Joining us on the show now is Ajay Kedia from Kedia Advisory. Ajay, hi, good to have you. And it seems like that March has opened on a positive note, not what Feb did to us or to the bulls in the commodity markets. I'll start with the crude oil prices itself. And while we are looking at rupee as a calculation as well, but at $84 a barrel, with the markets anticipating that Chinese demand will come back, Russia will cut output, and the second half of this year perhaps could be looking at further tightness in markets. What would your be near-term and a longer-term strategy for crude oil prices?
Very good one. Definitely, if you see the fundamentals are now building up for crude oil prices, as we know already, China would be the trump card because after the COVID restriction has been totally removed, all are expecting that good demand or good import demand would be there from the China. In fact, the numbers what we have seen in yesterday clearly shows that manufacturing activity is now picking up in China. So one side, good support has been there from the consumption side, whereas on the other side, Russia would be more important because they have already cleared their ideas. From March onward, they will be cutting down the production by around 5 lakh million barrel. That will again add some support to the market. Currently, prices are very near to $85, and we expect for a whole March month, prices is going to be on a positive side where we can see prices moving towards closer to $89 in international for Brent, and WTI can come up towards 80 to 83. Whereas on domestic side, we have continuously seen rupee has been now wandering near to 82, 50 to 83 level, which is giving some support on MCX crude oil also. Since last 15-20 days, prices are moving in a broader range of, let's say, 6,000 to 6,500. For March month, looking to all fundamental news, we expect prices can easily test 6,700 level on MCX. Whereas on the higher side, there could be some little bit gap from the US side because we have already seen inventories are building up. And secondly, US is trying to keep the prices at lower level. So some kind of profit booking on high level could be possible anyhow, but for the March month, we are expecting 89 for Brent to be testing, and on domestic side, 67, 67.50 could be the level we can easily see.
All right, so another $5 of a jump up in case of crude oil prices for the month of March seems to be on cards. Ajay, another question on metals really, because a very smart rebound is what we witnessed here as well. Here also the China reopening, expectations of further stimulus measures going forward is the cue really, but it is all going to be about the non-farm payroll data that gets released tomorrow. What are you looking forward from there? And within metals, do you have a favorite strategy, standout strategy though?
The data point is going to be very much important because already we have seen dollar index has shown a very good rally up from 150 to almost 105. But since last couple of days, we have seen prices, dollar index is not at all holding 105 level. Non-farm payroll data is going to be very much important because last time also we have seen data was been very much important. Today, even unemployment claims is showing a little bit reached up towards 196 level. So overall, we expect base metal is going to be slightly concerning at this level because some production has been resumed from Indonesia that can create some pressure for copper. Already we have seen prices tested around 785 last week. So as of now, we expect prices would be a little bit trading in a range ahead of this non-farm payroll data. But overall, looking to the consumption and Chinese data, we expect buy on drop should be the strategy for all base metal. Coming on individual commodity, talking about copper, pullback towards 760, 762 would be the good level to re-enter in copper, targeting at least 785, 790, where if it is breaching that level, then definitely a rally towards 820 could be possible looking to the demand. Whereas in case of zinc, there is a smart recovery from 262 level to almost trading near to 275 level. So we expect prices can go up towards 280, 284. And last would be the aluminium, where prices are thoroughly holding 210 level mark. Looking to the demand is improving. We can see prices moving toward 218 level in next, let's say, 1 week period. So overall in base metal, after this non-farm payroll data and event for this week, we can see a good buying from lower level would be there in base metal.
All right. And Ajay, what's your sense also on steel? Because we've seen strong demand expectations coming in for this one. Steel seems to be looking at some support now in the Indian markets and the international markets as well. Trading in the positive for the month of Jan, Feb and March has started positive as well.
Yeah, on domestic side, we have seen steel prices as consolidating now, but has been very good support in the area of around 46, 47,000. We have seen Chinese steel mills are expecting inventories are be slightly lower and production need to be resumed once again. So there will be a good demand for steel from China. Even if we talk about the output, which has been around 1 billion tons for 2022, and it is expected to show us some little bit fall in 23 also, which has been going to be supportive. So one side, recovery in economy will definitely support steel prices. On domestic side, on NCDX, we can see prices moving closer to 50,000, 50,500 as domestic demand should improve.
Okay, thanks a lot for that. And thanks, Manisha, as well, for joining us and giving us a quick update on what's happening in the commodity market. For the equity markets, there's no real recovery. But one of the stocks of the moment is Titagarh Wagons. So just pick up that stock on your radar now. It's up almost 180% in the last 12 months. It's having a decent run today, up almost 8-odd%. As we know, the 200 Vande Bharat train set orders, the Titagarh Wagons and BHEL, that consortium, has emerged as one of the lowest bidders. So we'll find out more in terms of what the exact order win is, what kind of growth does it mean for the company, etc. All of that on the other side. Along with Titagarh Wagons, you also have RVNL, which has emerged as the L1 bidder. So let's see what that stock is doing right now. It had a great run through the course of the day and now holding up with gains. So we'll take this conversation on the other side of the break with the management of Titagarh Wagons. Do stay tuned in. We're coming up with Umesh Chaudhary, the MD and CEO of the company, in just a while.
Welcome back. A 70-point decline on the Nifty. We have the mid-cap index as well, which was moving between red and green, and now a little more in red than green, so down 15 points. But one stock which has been doing extremely good in today's trading session, and not just today, we've seen a near 170% move on this counter for the last 12 months. That's Titagarh Wagons, up around 8% today and 170% in the last 12 months. Why is that? Because as we've been talking about it since morning, a 58,000 crore order coming in on the Vande Bharat 200 train sets, and it has been decided that it will be distributed between the L1 bidder and L2 bidder, and that's the lowest bidder and the second lowest bidder. The second lowest bidder is a consortium of BHEL and Titagarh. We have with us the management of Titagarh Wagons, Umesh Chaudhary, the MD and CEO, joins in. Thanks a lot for joining in. Mr. Chaudhary, one of the things is that the L2 bidder will have to match the L1 bidder's orders, rather the price itself. What exactly do you see this as an order value coming to you? What's the revenue share between you and BHEL?
So hi Mangalam, thank you for having me with you. So yes, this is the tender conditions stipulate that the L2 bidder will have the option to get 40% of the order quantity, but matching the L1 price. So we've still not heard from the railways officially as to in terms of getting counter offers, etc. But if we kind of calculate the overall contract value for our consortium, it works out to about 25,000 crores, which is the way we look at it, it's a complete game changer for a company like us, because we have been the largest freight wagon manufacturers, but this makes us a global train manufacturer, which is an international quality kind of an international standard train. So it's not only the magnitude of the order, but the magnitude of the transformation for a company like us, which has already got into passenger trains, but this will completely change the
BHEL in this consortium, sir?
Sure. So we are at about close to 55%.
Okay, so 55% is the share that you have, and the total contract value works out to 25,000 crores. That's great to hear. Congratulations, by the way. This is a really prestigious and a large order. And, you know, Titagarh Wagons, congratulations to the team. In terms of an execution timeline, what are we looking at? By when do you think the order can flow through into your own revenues? And what kind of a margin profile would you generally, you know, on an average enjoy with this order?
So, Sonia, this the first train has to be delivered in 24 months, and the trains have to be delivered in about 4 or 5 years thereafter. And then there is a maintenance. So the maintenance actually globally is a better business to be in. You know, the service business always gives us a higher margin. So we believe that on a blended basis, we should be able to maintain the same kind of EBITDA or even slightly better if going forward from what we have guided the market or what we have maintained in the past. And the way, again, I look at it is that we are a fully indigenous consortium. Both BHEL and Titagarh are the only Indian consortium to have participated in this tender. So if somebody from overseas, with all the difficulties that the Russians have, is able to you know, they're not here to do charity, so they would be obviously making margins. So if we can, they can do something, we'll do better.
Okay, got that. But you know, this is quite a prestigious order, as we spoke about it earlier. Any more such orders in the offing? Any visibility that you have over the next couple of years?
You see, the Vande Bharat is a train which the government is very clear that, you know, right now it's 200 trains that are being finalized, and there will be a total of 1,000 trains that they would like to add to their fleet. But then there is also an export market, and what we are looking at as Titagarh, and I'm sure as BHEL would be also looking, is not to be limited to the Indian market alone. You know, if with this kind of an order, $3 billion order, puts us in a global scale. So our ambition, and particularly with our presence in Europe, in Italy, we would like to then now look at, after establishing ourselves with this order, how can we really take this business global?
Right.
And that's going to be the opportunity. Of course, India will present a huge opportunity. In the next 10 years, I believe is the decade of India.
Right. The next 10 years is the decade of India. Everyone in the world believes that. You know, Mr. Chaudhary, just wanted to understand a couple of numbers on this one itself. What is the estimated cost of per train set? What was the difference between the L1 bidding and the L2 bidding? You said you haven't heard of a counter offer, but will you be able to match the lowest bid while maintaining the same 8 to 10% margins that you've guided for?
So yes, we've done a lot of number crunching and all of that, and you know, so the tender also had certain peculiarities, all of which at this point of time I would not be able to discuss. But you know, the tender said that the L1 bidder would have to assemble the trains or test them in a place called Latur. The L2 would be doing it in Chennai. Chennai has a better ecosystem, a better vendor base, and so on and so forth. So strategically for us, it was perfectly fine to be L2, and we had factored in that there would be certain cost challenges, price challenges. I would say that the prices are very competitive. They are challenging, but then at the same time, because the volume is so large, there is a 35-year service attached to it. We would be able to maintain the margins or even improve upon that, because we also must understand that this is one of the largest contracts in the world. So, you know, the entire supplier base would be kind of available to negotiate.
So, you know, generally, and correct me if I'm wrong, generally when such large orders are given out, for execution of these orders, you may have to take on some debt, I guess. The investment would be large as well. The payouts may be a bit delayed. So will this put any stress on your balance sheet? How are you managing the investments, and will this mean higher debt for you?
Not really. I mean, we already have the facilities. So we've already invested in our facilities. As I've always said that in the last 5 years, we've continuously invested in our facility. We've created capacity for 200 to 250 coaches per annum. Now we are enhancing it to about 450 cars per year. So it will require working capital debt, but that's something which we factor into the projections, into our workings. So it's not going to be, we are not going to be kind of overwhelmed by the cash requirement, or we're not going to load ourselves with debt owing to this order.
You said that there is an export opportunity as well, and opportunities coming in from the government itself, 5 times the initial size. Can you give us a sense of whether you have the capacity to handle that kind of magnitude? That is point number 1. And secondly, I'm just looking at the timeline of revenue recognition. You said 24 months from now is when the first train has to be delivered. 26,000 crore is the upfront payment for delivery of train sets. 32,000 is to be paid over 35 years as maintenance contract. 40% of the total orders, of which you have 55% of shares. So just plugging in those numbers, so you're likely to get about 20% of the 60,000 crore order, which is close to about 12,000 crores, but this will be over a period of many years. What could the incremental revenue, annual revenue be for you?
So our share would be about 15,000 crores, give or take. That's the approximate share of our business. But the 60% of this, 40% of that is for the train supply, and then 60% is for the maintenance. So our immediate revenue would be about 7,500 crores over the next 5-6 years. So that's on a ballpark the number. But it's, as I said in the beginning, it's not only the revenue of this contract. The dynamics of the company really changes, because we are in the big league of train manufacturers. And once that floodgates have opened, if I can call them the floodgates, the opportunity that exists is even larger than what we have got.
We have spoken to you, at least I have spoken to you over the last decade, and I'm so glad to see this journey play out for you, from a wagon manufacturer now to a world-class train manufacturer. The company has done very well, and hopefully it'll do a lot more for shareholders and for all of you folks, and for the country. I mean, this is what, as you said, one of the largest contracts in the world, and the Vande Bharat train system itself has been, such a pleasure. So great to see things going well. All the best.
Just add, Sonia, that being Vande Bharat train, this what gives us immense pride and kind of satisfaction that it's an Indian consortium that is going to build this.
Absolutely.
So, we were the only Indian consortium, purely Indian consortium. So when we call it Vande Bharat, this is right kind of giving us the pride to do that. And also to touch upon what Mangalam mentioned about the size, about the appetite to grow. So 2018, or just 4 or 5 years ago, we were a 300 crore top line company, and we were 766 crore last quarter. So we have that, we have kind of built that ecosystem inside the company wherein we can handle the growth.
Great. Both Sonia and I will say Chaiya Chaiya to that, because that's the only train song that we know. Wish you good luck, and wrap up on this edition of Halftime Business, Halftime Report. Business Lunch will take all the action forward. Thanks a lot, Mr. Chaudhary, for joining in.